Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. And this is a very compelling story because it is definitely the wave of the future. And this company, once they get rolling, is going to put the US in a much better position than I think it is currently in. So I recently met with the company. Actually, I met with them once before, so that's kind of a lie. I met with them about, I don't know, I want to say 6 to 8 months ago and had an interesting conversation, and they kind of fell off my radar. And now they are back on my radar. Electra Battery Materials, and Trent Mell is the CEO. Trent, I want to thank you so much for coming in and doing this interview and sharing with us the story for Electra. You had a pretty exciting week last week. Kind of caught me by surprise because when we talked, what was it, 3 or 4 weeks ago, you were trading on the OTC. And as of today, you are trading on the NASDAQ.
Yeah, it's been a nice change. Well, first off, thanks for having me, Tim. And yeah, I remember our first call. You gave me a good 101 on technical analysis and what you were seeing in our stock. So I remember our first chat very well. So yeah, happy to be here. But it's been, yeah, you're right. When we spoke, and I've been hinting at this for a while, right? As a Canadian listed company, we've done some M&A. We bought an Aussie company, so big share structure. And we knew that a U.S. listing required a fairly big share consolidation. So we did an 18-to-1. Which had me nervous, as we discussed, but yeah, we decided it was time to pull off the Band-Aid, and it worked well. despite the carnage we're seeing in the market, especially on the NASDAQ this quarter, we traded up about 15% through the consolidation. By the time we listed last week, we were flat, but the liquidity has picked up. The swings have picked up as well. It's been a fun journey, and last Wednesday was special for us because we were able to go down and not only list but also ring the closing bell. So that's always kind of nice to mark the occasion in that fashion.
Yeah, I just watched the video of the NASDAQ, you ringing the bell, and that's got to be an exciting moment for you. I mean, and validation, right? I mean, there's two things that are happening here, right? It's exciting for the company, but validation of what your vision is, right? But before we get into the vision, why don't you give us a little background on Trent and how you got here?
Sure. Yeah. I mean, it was a weird route, I guess. I mean, I started out my career kind of going back to school in would have been mid to late 20s to study law. So I guess my first sort of professional career was a lawyer at one of the big Canadian law firms doing merger and acquisitions and securities and financings and all the deal work, which I loved. But ultimately, I was papering somebody else's deal. So the idea of jumping onto the business side was more appealing to me, being able to build something rather than help somebody else build it. So the way I got there, being in Canada, if you're out east, you're doing mining deals. If you're out west, you're doing oil and gas. So I did a lot of mining. I ended up getting recruited into Barrick Gold's, world's largest gold producer, and that was a fun period as well of M&A and winning as a lawyer. Eventually, I went to Kellogg, did my executive MBA, but through that time, cycling through different companies. I was at Sherritt, so that's the first time I got into nickel and cobalt. I went back into the gold space as well. I worked for a palladium company, so a handful of producers, bigger companies, where I got to look at how the big companies operate, how to build mines, how to run mines around the world, how to deal with the geopolitics. I saw a couple of projects blow up in spectacular fashion, which probably need better education, frankly. After a short stint with a family office, kind of on the sell side, raising capital for mining companies, I came back to this company 5 years ago. Initially, it was called First Cobalt, and so we started this in March of 17. And so the investment thesis hasn't changed, except the ambition has gotten a lot bigger. Right back then, it was looking specifically at cobalt, at the commodity, knowing that 70% of EV battery materials is coming out of the DRC, 80% being processed in China. Let's go find more cobalt, right, to get out of the DRC. And we've got our asset in the state of Idaho, which I think has got a really bright future as a state, as a cobalt producer for America. But along the way, we picked up an existing refinery asset in Canada, and that's where we're allocating most of our time and attention. Right, that's the best allocation of capital to get us to cash flow. And so over the last 2 years, it's been a lot of hard yards. And as we got closer to bringing this asset into production, we did our debt financing last summer, got the last pieces together. We announced a broader strategy. We're not just going to be cobalt. We're going to be cobalt, nickel, battery recycling, and create that right ecosystem to bring in the first stage of battery manufacturing, the precursor, by 2025.
Okay, so right now you have a facility in Canada, right? But then you're also looking at potentially in the States, correct?
Yeah, that's right. That's right. We talk about our battery materials park. It's an existing permitted site that's north of Toronto, about 5 hours north of Toronto. So a heck of a lot closer than China. And that one's well at hand, right? The refinery was already existing. So we're doubling it. We amended our permits. And with all of that, I think it's the walk before you run. Now that we've done that, we've de-risked also our second element of our growth plan there, which is going to be battery recycling, basically processing black mass from shredded batteries. But thereafter, it's how do you grow? And so I would point to maybe two opportunities. One is there's a similar battery materials park coming together in the province of Quebec. And then America's got a lot of opportunities, whether it be battery recycling or replicating what we've got here in the US. Permitting's a little harder in the US, frankly, but I wouldn't be surprised to see us grow there because the supply capabilities of the refinery we're putting together, 1.5 million vehicles, is kind of the target. We're going to lap that here in 3 or 4 years. That's not going to be enough for any one of the big three, let alone the whole market.
Right. So, I mean, you look at, we were just talking about it prior to hopping on the camera here, but we were just talking about the fact that it seems like the timelines continue to be moved up as to when we're going to, get away from combustion engine vehicles and go all electric. And, if you just as I look at the infrastructure that we have in place, and I'm not just talking about, charging stations and all of that, although that is something that I think about quite a bit, but it is also the materials that seem to be difficult to get for the batteries, right? So as you look at that, and that problem is not going to, at least I don't think, is not going to get better. I think it's going to get worse, because if we're pushing more and more conversion to electric vehicles, that's going to make the problem much more difficult, right? And this is not something that you solve overnight. You don't.
Yeah. No. I look at Tim. I'd say to get an understanding of it, you've really got to get into the minds of the automotive executives. They're in the business of building cars, and as they transition, it's been. I mean, it feels like they're at a running pace now, but it was a slow trot 2 years ago, right? It was, we're going to start converting. We'll make some cars, and we're just going to buy our batteries from Panasonic or LG Chem, or Tesla was always a little ahead of everybody. But the narrative in those companies now has really changed. Last year, we make our investment decisions in the U.S. for battery plants and assembly plants, and here are our partners. GM and Ford got their partnerships lined up. But the onshoring of the rest of the supply chain, I would say 2 years ago, was still up in the air. And we don't know if we're going to want to make our batteries here. We don't know if we're going to want to get our materials processed here, and that has changed. The onshoring process, the Ukrainian war is a case in point. Tensions with China, to rely on foreign powers that are maybe not close allies is proving to be a dangerous thing, and it goes to national security. It goes to our economic interests, the future of the auto sector, and so. This onshoring, people are saying, well, one day we'll do it. I think 2025 is when they want to have, a lot of these guys would like to have, gals, would like to have as much of the supply chain as you can have here. And why not, right? We've got the nickel, we've got the cobalt, we've got graphite, lithium, we got it all here. So you got to connect that with the actual operations. And now there's a bit of a race on to try to lock down the partners and try to figure out who's gonna dance with who.
What's so kind of scary to me is, as I look at it, it's okay. So now we're going into this whole new realm of energy. And if you look at what we did with oil and gas, we are reliant upon foreign powers, and some of them that don't like us very much, for our oil and gas, for our energy needs, right? And then you look at what we're doing now, and China's got 80% of the cobalt. 80%, right? I mean, what are we doing again, right? Putting ourselves in a position where we are dependent upon foreign entities that don't necessarily like us very much for our energy, right? Not too smart. So, hopefully we learn a lot faster this time and make the moves that we need to make, which is what I think your company is doing, right? I mean, you are not waiting on any politicians or anything. You're just moving. You see a need, you see it's going to get bigger, and you're trying to solve that problem now. You're working on that now.
Yeah, and we're early, right? We're going to hit production on the cobalt plant. We'll commission it in December, so January we're making product. Ostensibly, you're a couple of years early. Realistically, though, as everybody knows, if they want to wait until 2025, well, one of the competitors will have scooped up our product. So, yeah, we're early, but it also sets us up well for growth, because we know that our one plant's not going to be enough. Now, the ray of hope here, I think. Well, let me talk the problem, then the ray of hope. That the problem we have in America is we don't want to mine, right? You look at the DOE funding, the DOD, all the programs that are out there to help solve the supply chain problem. It only starts once the material's out of the ground. So we're still not there yet, right? We still got this NIMBYism, this fiction that everything around us, our piping, our phones, our electricity, that's all mined. And we still, as a society, we don't want to admit that mining is an integral part of our future. And it's probably born out of ignorance. We did things differently 40, 50 years ago. We've got Superfund sites. There are scars in the landscape, but that's not mining today. Now, the ray of hope, conversely, and that's a long lead to get there, right? To build these mines. But I'm starting to hear more, and I've been preaching this for a while. More of the auto executives, I think, are going to start to take a stand in DC, right? Policymakers, and they've got a better voice than we do, right? To bang the table and say, look, we got a mine in America. We've got nickel in Minnesota. We've got cobalt in Idaho. We've got lithium in Nevada. Like, let's get our act together. And I think it's happening quietly already. I think that chorus is only going to pick up here in the next year.
Well, so that's one part of it, and I think it does make sense. But the bigger part in my head is the consumer, right? The consumer is a big part of the reason why we are in the predicament that we're in, right? We don't want to drill for oil, we don't want to drill for gas, we don't want to, and that's what put us in because we want to, and I understand, I don't want anybody to think that I'm like, I want to ruin the earth, because that's not my intent at all, right? But I look at what's happening today, the demonizing of the oil and gas industry. The reality is that was the system that we were built on for our transportation system, and for many other things, right? Because oil is used in the manufacturing of a whole bunch of different stuff. So if you look at that and you say, okay, I understand that we want to get to renewable, 100% renewable energy between, by 2050. My issue is that we don't have a plan, and a comprehensive plan recognizes, yes, we want to get to 100% renewable, but we are going to need oil and gas as the bridge to get there, right? So let's not demonize them and make everybody hate them and have all the pension funds and hedge funds pull their money out because they're not going to invest in fossil fuel companies anymore. Pretty dumb. I mean, the whole thing is dumb. Support them and then, have a plan for them also to be able to help in that transition to 100% renewable, right? That's the way that I view it. And I just don't see that everything is, sensationalized, and it's all about the constituency, and they don't want drilling, and you don't want windmills, you want windmills, you just don't want them in your backyard, because right. Just as long as you can't see them. Yeah, I'd love to have windmills for renewable energy, or solar farms, just as long as it's like not right next to my house, right? I mean, we have to bend here, right? And recognize that we need mining. We need a big old pit in the ground. I mean, that's the only way you can grab these resources, right? And if we keep letting other countries do that, we strengthen them and weaken ourselves. And we weaken ourselves in what I would consider to be one of the most important areas. You said it earlier, national security. I mean, we don't have energy, or somebody can cut off our supply to energy. That's a big problem, right? And you have to recognize that. That's why a company like this, you may look at it and be, a green energy, love the planet person. Well, you're going to have to love a company like this, because that's going to help you get to your green energy planet, right?
Yeah.
It may not be perfect.
Yeah. No, I had an NGO have that conversation with me a couple of years ago. He said, geez, and in our case, we're talking about in Idaho, these are high grade underground deposits. So the footprint is minimal. And when you're gone, come back 10 years after the mining has stopped, you shouldn't even recognize there was a mine there, right? The adit's been concealed or closed up. Everything's been removed, and you've got your trees growing again. And that's mining of today. But this guy said, geez, Trent, you got me in a bit of a pickle, because on the one hand, you want to mine and put a hole in the ground. The other hand, what you guys are doing is cleaning up the atmosphere. So I don't know how to think about you. And I just think, well, yeah, exactly. Thank you. I'm not sure where he sits, but that's the conundrum when you're forced to face with the reality that, whether it's oil, gas, whether it's batteries, whether it's the local garbage dump, human activity makes an imprint on the face of the earth, and we got to do that sustainably. The nice thing with batteries and the transition to renewables, I agree with you, Tim. It's going to take a while. We're not going to go 100% in 10 years, But the nice thing is when you get there, these are materials that we're taking out of the ground that can be used over and over and over again, right? We can recover, I'll throw a number, 96, 97, 98% of battery materials through modern recycling. And that's the other part of the story here. Now, population is growing, demand is growing, so we're going to need mining for a long, long time. But there is a virtuous closed loop circle here, opportunity that maybe we didn't use or avail ourselves of in the past.
Yeah, I think what is really unique about Electra's story is, the plan to develop this thing out all the way as kind of like a one-stop shop, right? I mean, and that is very unique, right? I don't think
right now you're mining.
that.
No, you're mining, and you're mining mostly for the alloy for the metal markets in North America. But there's nobody that's taking that mine material and making it in a usable form for the battery, right? So we are Electra. Well, we got a mineral asset in Idaho that will be a mine one day. I'm confident. Our essence is really we're a chemical company, right? We convert minerals to a battery grade form, and you're right. The best op. Why? Because it's more efficient. It drives down your costs, operating and capital costs. It lowers your environmental footprint. And so if you can do cobalt and nickel and battery recycling in one place, that precursor manufacturer, that first step of making the cathode, you want to be there because you're not having to take cobalt and nickel that we've now got in solution and crystallize it, bag it, ship it, only for them to put it back in solution. You're piping it all over. So these sort of industrial complexes, we see it in Finland, we see it all over China, but we don't yet see it in North America. And so our site in Ontario, there's going to be a site in Quebec, are going to be the two of these, I guess the first two integrated battery materials parts. And I think we're going to learn from that as a society how to do it right.
So the location of you, I mean, with respect to the car manufacturers is, I think, really, like you said, it's not China.
Yeah, that's right.
lot closer, right? I mean, if you think about that for a second, that is an ESG thing. It will be an ESG thing for all of the car manufacturers because their carbon footprint will shrink because they're not getting it from China, right? Because you're not shipping it from China to here.
Yes,
you're shipping it from there to there.
Yeah, the transport footprint on our cobalt, for instance, is going to be half of that of material flowing through China. The carbon footprint of our actual operation, our refining operation, because we're on hydroelectric grid, it's a hydrometallurgical, it's a chemical process. Again, it's half of that of the biggest cobalt producer in China. So ESG will win that hands down, and that'll apply to the subsequent growth opportunity. So huge opportunity to have it here domestically located. And I would say my prediction is that this is where your the neighbors to the north, Canada is going to play an important role because permitting these operations, like permitting a mine in the US, it just takes longer in the US. And Canada's got more active mining operations. So locating this close to the mine feed, we're 2 hours north of 2 hours away from Sudbury, one of the world's biggest nickel belts. And so I would anticipate that this is where the US is going to be where batteries are made and EVs are assembled largely, but Canada is going to be the mining and the chemical conversion process. So great under the free trade agreement to have that kind of synergy, given the porous nature of the border.
Yeah, I the more I look at this story, the more excited I get about it. So let's talk about the net effect of the reverse split. And I know that a lot of people do not like, especially retail investors, do not like reverse splits, right? Because you had 1 million shares and now you only have, X amount of shares. So the thing is that reverse splits got a bad rap for a long time because companies that were really just trying to stay listed, whether they made money or had a viable business plan or not, it was a tool that was used to be able to keep them alive longer, right?
Yeah, that's right.
That's significantly different from what you did, right?
Yeah.
The reason that you did the reverse split was not because you're trying to stay alive or because you did you get, when you originally set this up, did you do a shell, take over a shell?
It was, yeah. Shell was
Okay.
taken over, and in fact, I wasn't here. The promoters, if you will, the Vancouver guys who put this together, they had an idea, and they named it First Cobalt, and they got their. And I will say for the record, I didn't get any of those cheap founder shares. All my position was built alongside shareholders, honestly, in the market. So they're long gone. But it was a shell that we took over. But really quickly, I merged First Cobalt with 2 other companies, including an Australian company. And so you're right. It's kind of horses for courses. Australians, they love penny stocks, right? The lower the denomination, the better. 3 cents, 4 cents, bring it on, billion shares. And so by doing that, we had this capital structure that it worked certainly for Australia, and it did work for the Vancouver Stock Exchange, the TSX venture. But it doesn't work for the US as we sort of grow up, right? And you want to see your shareholder base diversified to include institutions. I mean, you got to be at least $3 US, right, to go on the NASDAQ, preferably over 5 to make yourself more accessible to, and it's not just the institution, a lot of retail in the US can invest in the venture. So we saw our liquidity kick up like crazy. But back to your point, I was, I was scared as hell about the rollback because most companies that do that do it for the wrong reason. It's a defensive posture just to meet the minimum listing requirements. And we were trying to do something more progressive. I studied like 24 of these things and got comfortable that we were doing it for the right reason and it should work. But until you do it, I'm now sitting on 250,000 shares instead of 4 million plus. And I'm proud to say so far, at least, we're 4 weeks post consolidation and just a few days into the NASDAQ. It's turned out pretty well. And I'm pleased that investors seem to understand that we're doing this, to build a real company.
So I think the real important part here is that, this isn't a company that's just got a whole bunch of headlines that are coming out. They have real assets that you could go and visit. If you want to go see if there's a real operation there, you could go, drive up and see that this is a physical location and there is work being done, right? Yeah. This is not some fluff piece, right? There's a big difference. And, I will tell you that the biggest concern that I had with the company when I first met you and heard the story was the bloated share count. That was a concern to me, right? Bloated share count, low price, but bloated share count. And the reality is most funds cannot participate in a stock at US funds. Their covenants won't allow them to buy a stock under $1 or under $5, like you just said, right? So the big money, the smart money is not in the stock when it's trading on the OTC with, 500 million shares. It's just not. The move that you made was the right one. This is a viable story that is, I think the demand is going to get bigger for. And like you said, you're early and you're looking at a complete solution, right? Which is going to benefit the US car manufacturers, right? It's going to benefit our environment, even though, yes, it is mining. There are a lot of positives that are happening from this. And now that you're on the NASDAQ, that's one less thing that you have to put your time towards, right? Which is a lot of time because you got to go through all the hurdles of trying to qualify to get to the NASDAQ, right?
Yes.
That's behind you now. Yeah. And you can put that energy towards growing the business, building out the business.
Check the box and move on. Yeah, exactly. And look, I appreciate your comment too, but it being a real asset, right? And that's why we've got a couple of pictures in there, the inside of the plant, the outside. And, we're going to increase the footprint of this thing. But there you go. This is an asset that operated for 10 years. It's got permits. That little green space to the right, there's a building slightly bigger than that one that's going up as we speak. And I see this all the time, in the industry, whether it be mining or chemicals. The recycling market is full of stories, right? We're going to be big. We're going to do all these crazy things, and we've got technology and patents and people. But show me the asset, right? And this is where we distinguish ourselves. That's part of the NASDAQ listing, right? Is I think we've matured as a company. I mean, for me on a personal level, it's a vindication here that we've kind of made it, right? We've gone past the startup stage, past the concept. We're in construction. We're spending about 1.3 million a week. If I were to average out the spend here on our development, and our operation will be commissioned in less than 8 months, and so it's 7 months. It's exciting times, and the NASDAQ will get us that broader audience. I'll be marketing, Europe, US, just get the word out to institutions that, like you said, Tim, when they look at the share count, I would spend time explaining, well, apologetically, well, we have 500 million shares because we bought an Australian company, but we're real. And a lot of them have been standing by, and maybe the crazy volume we saw last Friday was a little bit of reflection of that. We did. I'm a fairly transparent guy. I didn't conceal the fact that we wanted to do a roll up or seek a U.S. listing, and the feedback I got from some of the family offices and institutions as well. Yeah, I'm gonna wait. I'm gonna wait to see how that transpires. So onward and upward.
Right. Look, I think the environment in the market right now, not just for you, for everybody, is kind of like, I want to wait and see what's happening, because we're starting to see a lot of volatility. I can see we're down again today. We were down big on Friday. There's a lot of uncertainty. Wall Street hates uncertainty. That's just the facts, right? So the Russia-Ukraine thing is definitely not a good thing. COVID was definitely not a good thing. But I will say that good things happen from bad things. I mean, it's just all how you look at things, I think. But, the supply chain issues because of COVID, there is a big, bright light shined on supply chain, right? And our dependence upon foreign entities to get all of our parts, pieces, and stuff. And that is really, I see indications that there's a lot more manufacturing activity starting to develop back here in the US, right?
Yes.
And if you're a CEO who's in charge of a company that has not looked at your supply chain and thought, gee, maybe we should, I'm not saying you pull everything out of wherever, but maybe you have a backup in the US or, someplace closer, Canada, right?
Yeah.
If you're not doing that, then you probably shouldn't be CEO. I mean, that's just the facts. And then now you look at what's happening with Russia and Ukraine, the dependence upon, Germany was going to have even more dependence on energy with Russia, right? Pipeline. You take a step back and you look at it all, you say, okay, now wait a minute. Now this is kind of an eye opener, right? This is what can happen if you put your dependence in somebody else's hands. And that is why that is such a huge, look at what we're doing again, because we're going to allow China to have 80% of all the cobalt. That puts them in a very good leveraged position, right? Yeah. And we can't afford to have that happen. So you're addressing it now, you're early, and that's why people need to find you, discover you, and support you.
Yeah.
Right?
Yeah. Yeah.
Understand.
I gotta find a way to tell the story in a simple form, which is why we're a chemical company, right? We're that first link of the battery making process. And so, in addition to our construction and hitting commercial production, I think the big catalyst this year that our investors are waiting forward to is, well, who are you selling to, right? So my VP commercial and I will be in Asia in, a month. We're in Korea, we're in Japan. We got to plug ourselves into some of these battery makers and ultimately the OEMs. OEMs are kind of leading the charge there, but we got 5 years of feed. Selling the production is easy, but knowing who the partnership or partnerships will be is going to be important. So between that, growth opportunities, and even some of them are even asking about our Idaho asset and how they can help us build that out, right? Whether it be
that's a very interesting thing too, right? So as I look at it, I think you and I talked like 4 weeks ago or whatever, but I look at small companies, microcap companies, and I know how challenging it is for them to get capital, right? To get financing. And the problem is that you've got lenders out there that aren't necessarily your friends. In the beginning, it seems like they're your friend, but they're really not your friend, right? So what's really critical for companies like yours is that you find true partners, right? That true partners that can give you the capital you need to grow your business without putting you into a death spiral, right?
Yes.
And that,
Yes.
and those are real partners. Those are not the guys that are, you know, going doing an offering, pricing it, you know, way below where the stock is trading, put, you know, a whole bunch of warrants and preferreds,
Yeah.
and
Yeah. You got
none of that stuff
it.
is good. None of
Yes.
that stuff is meant to help the company. All of that stuff is insurance for the financial institution that if you go belly up, they get paid no matter what, right? They're going to make money no matter what happens to your company.
And I said, in my sort of 20 years of resource work, you know, I've seen the ups, the downs, and I've seen some ugly structure. I've seen a death spiral convert in one company. And so, you know, I'm certainly more of a business person or a capital markets person than I am technical. And I think that served us well right through the startup. We've got 37.5 million US of converts out there as part of our lending arrangement. You know, price of admission to get the project built, but they were with 3 private funds in the US. 2 of them are bank owned. So, you know, relatively friendly. They're looking after themselves, but we didn't go for the fast money listed converts. We didn't accept warrants or, you know, impairments on the asset. And likewise, now that things are coming along, we've had a few people bang on the door asking us if we want to raise money. And I said, well, no, we don't raise money. We want to enjoy this ride. And there will be needs that and look, there's got to be a clear use of proceeds. Money to build our recycling circuit, sure. But we're not going to take it, like I call it the cats and dogs order book, right? Where you get your hedge funds and family off. They're there for a good time. They want a half warrant or a warrant. I said, we're past that. We're going to be patient. We're going to market. And if the time does come to raise growth capital, then I want to see the book, right? It's going to be a strategic investor or a cornerstone institution. But yeah, part of the successful building out of a company, particularly where we are now, is to make sure you know who's coming in the door, at least on any sort of primary issuances, because you're right. And I kind of know, you know, I got a good feel banks I like and don't like, and relationships I've had and trusted. And we've got the good fortune now of being in a bit of the driver's seat, which junior companies often don't have the opportunity.
And the companies that you are going to be supplying through, you know, I think that they would become really interested in becoming stakeholders in what makes sense, right? I mean,
that could be.
If I was going to be your customer and I thought this is a pretty good strategy, I would want to be a stakeholder in it, right? So why wouldn't I participate in helping you build out this vision that's going to help them ultimately, right?
Yeah,
that's a true partner, and that's a win-win for everybody, I think. So, and those doors are going to open. And you already indicated that they're already starting to open. So, phase 1, battery grade cobalt sulfate, right? And that is, you are in production and being able to sell it in how long?
So January will be first production. And so, you know, in that regard, we're in a peer group of one, right? Nobody's doing what we're doing in North America. I will say, just to be, you know, to be clear here, like China, we're taking our material from the Congo. And that's just a reality of what we've got available to us today. And so, there, you know, there's a good way and a bad way to do it. We're buying from IXM and Glencore, certify the supply chain. There's transparency initiatives. There's world bodies that are, you know, tracing provenance of the material. These are methods that have been looked at, and I think vetted by the likes of VW and Tesla. And so, you know, DRC, there are some big operations and there are some shady ones. And so, I need to clarify that because a lot of people get worried to hear the DRC, and I get it, but we won't have an EV market without the DRC. You just got to figure out how to do it right, like we did with diamonds, right? Blood diamonds. You know, we figured out tracing around that. Tin and tungsten, tantalum, also at the DRC. How do you trace that? And it's not rocket science, but you got to do it. And the systems, frankly, weren't there in 2017 when reports of child labor and abusive labor practices were brought in. I think we've come a long way. So so phase 1, cobalt in time, but more recycling products and Idaho to replace that. But everybody you see here on this league chart here of producers is buying from the DRC. And the phase 1, So and then we go to phase 2, the battery recycling. This part, like, this is exciting to me because the margins are actually pretty good. And this is where there's a lot of smoke and mirrors in the industry. Nobody's really doing it at scale. But the reality is, when you initially, there's 2 steps, right? First, you got to collect the batteries and take the casings and plastics off, and then you crush all the cathode and anode material into a black powder. And in that black powder is lithium, nickel, cobalt, copper, graphite, manganese. So there's a lot in there. It's very high quality material. 90% of that today is going to Glencore, goes to Glencore's facility in Sudbury. So despite all the hype we hear about all these names that I won't name, nobody's there yet. And so we can get there. We're not going to go big, because the reality is the market today is your cell phones and laptops, power tools, right? There's a lot of EVs out there to bring back. But what's nice is our facility, hydroelectric and hydrometallurgical, so that means everything is basically dissolved into a solution. That is what automakers want to see: high recoveries, low carbon footprint, just a much better story for the environment. We're not going to shred the batteries. There's enough people that do that. But we've got a plan. If you go down just a little bit, Tim, you see the inside of the plant as it exists today. Some of this is going to be redeployed for our cobalt plant. But as we're building that other building, this circuit is now intact. So in August, we're going to fire up this plant to do our demonstration plant. We've been working on our process technology for a couple of years on the battery recycling. We're going to run it through this plant in an uncontrolled environment, get it out of the lab and into the real world. And then we'll shut her down. And the idea is by 2023, you start doing the battery recycling. And this is where it gets fun, because you get to start creating that closed loop supply chain, and we'll recover everything. Manganese is tough for all of us because frankly, the returns are questionable. You can do it, but it could be a loss leader, but everything is recoverable in very, very high percentages.
Okay. So let's see, established network, black mass supply. It sounds like a movie.
Yeah, it's got an unfortunate name. But you know what? We announced our recycling plans. Michael Insolin, our VP commercial. I mean, we've heard from probably 30 different black mass producers. There's a lot of people that shred batteries, right? The same folks that have been collecting catalytic converters, lead acid batteries. You know, you've got this whole network. We don't need to do that. There's enough people that have it. The hard part is building and permitting a $200 million refinery, which we'll have at the end of December, right? They can receive it all. So yeah, so we're going to stick to one side of the supply chain. We don't need both.
That's fantastic. Okay, so 25 plus black mass partners. Let's see, scalable, initially targeting 4,500 tons of black mass, treating multiple types of black mass.
Yeah, so again, start small. These you saw the picture. It's tanks, right? It's leach tanks. It's extraction method. So you can grow this in a modular fashion. We don't need to start at 20,000 tons, because frankly, the market's not big enough for 2 or 3 of us to do that. So we'll go small. In the early days, we're going to sell some of the product to Glencore. Again, just the whole ecosystem is being developed. So it's how do you de-risk? We'll de-risk the front end on the feed. Some of the sales contracts are in place. We're talking to a couple of lithium companies on the lithium extraction to get that converted and upgraded. So it's not, and that's another important piece. We talk about closed loop. It's not that all these metals are going to come to us and go right into the battery. We're kind of not there yet. The point is, if you can recover high 90s of everything and have it redeployed, some of it goes to the battery, some of it to the alloy market, some of it gets upgraded by the lithium guy. It'll find its way back into a usable form somewhere in the market. Eventually, we'll get a little bit better, but the market, again, we need a few more pieces in our investment cycle, including the nickel plant. This is going to be a big one for us to then keep the nickel and the cobalt and recycle it into a proper battery. And so this is interesting. But the federal and Ontario government have partnered with ourselves. We brought in Glencore because they're one of the world's biggest nickel producers. Talon, they've got a great project in Minnesota. Not as commercial partners, just study partners, right? They know the nickel space. They've got metallurgical test work they've done. They've got material we can point to, but I mean, there's a lot of nickel on the continent. And so the idea here is, if we've got a 5,000 ton cobalt production facility, you're going to need like 40,000 tons of nickel. This is a big lift because there's a lot more nickel in a cathode than there is cobalt. And so the study group here that we've got, the 5 partners, really three technical partners, it's just going to allow all of us to wrap our heads around, capital costs and the footprint, water usage, electricity, power needs. And then from there, you're at a bit of a crossroads. And I say that because we've got all these conversations going on with OEMs and battery makers. They're talking to nickel producers. We're talking to nickel producers. Ultimately, once we bring it together, I said, you want to bring together this PCAM, the precursor manufacturer. They're tied to a battery maker. So all of these relationships are already established or being established. And so we're not going to jump yet. I think the outcome of our commercial talks with the OEMs might click a couple of these Lego bricks together around what nickel asset we want feeding us for processing, and ultimately who the precursor partner is going to be. So bit of complex multi-party talks, but we've got some time because we're still ramping up phases 1 and 2. And by the time that's done, I think these next blocks, it could happen quickly, but we're just gonna get savvy on the technology, and then in terms of the mine feed supply, that will come here as the commercial is going to lead it.
Okay. So after the reverse split, how many shares are you looking at fully diluted?
About 33 million. Yeah.
Boy, that's a big,
nice change.
Big change. Right?
Yeah.
I mean, and I consider anything under 100 million to be a thin stock. You know, because if you look at a company like Microsoft, or I mean, these are companies that have billions of shares outstanding, right? Billions with a B. So anything under 100 million, I think I would consider almost a low float stock. I mean, it's not uber tiny, but it's low float, right? So if you have a significant news event, when you have only 33, I mean, look, let's face it, a $5 billion fund could take 33 million shares in a heartbeat, right? One fund. When you got a bunch of funds that get interested in a story like that, and you have 33 million shares, what happens? The stock price goes up. It's how much do you want to pay, right? So, and there's only so many shares in the supply. So I consider that to be a small float. And you are, I mean, things start to, when do you feel as though things really start to get exciting, Trent? I mean, for you, what's the milestone that you're like, I can't wait till this happens?
Yeah, it's a bunch of them. I guess so we'll do the recycling this summer, but that's more progressive. I guess it's going to be that automotive partnership. And we've been talking to some of these players for 2+ years. But now the intensity is picking up. Again, we're in a peer group of one. People see that we're real. We're moving to production. I had OEM meetings back to back last week, 2 days apart. I think they both kind of knew we were talking to them, which we don't advertise, but you could just feel the anxiousness, right? It's just like we see, and the elephant in the room was always Tesla, right? Oh, Tesla beat us to it. Tesla got a lithium deal with so and so, or they got their nickel deal with Talent. But now the other players are starting to do it too, right? You've seen GM and Ford and VW announce direct feed contracts and strategic relationships, and so there's a little bit of FOMO going on right now about, geez, we better start locking down players. So I think that's the big catalyst. Look, I'll tell you, we've got 2 or 3 MOUs already out there that are working their way through legal departments. It's some big companies. So it could happen in.
Do you think that the intensity that you're seeing has to do with the uplisting to the NASDAQ? Do you think that played any role in that?
I think on the industry side, it's that everybody's copying Tesla now. And there's this recognition that, geez, we've been keeping Electra waiting for a while. We better turn our minds to it. I don't want to overstate it, but I tell you, I could have a term sheet on our desk tomorrow. Like, some of these talks are advanced enough that we could be that close. Having said that, everybody's got a lot going on. You're building an entire ecosystem, and the internal teams are being built. So these teams keep getting bigger as well. And so there's a lot of dynamic that's kind of gumming the wheels a little bit, but there's a growing sense of urgency. So I would not be surprised if this happens sooner than later. I don't know what that means. Again, weeks, months. I've been saying that for a year now. So I don't want to mislead, but we're bloody close. And I think that's probably the most exciting thing. And I think it'll happen before we commission our plant in December.
Right. Okay. So, I wanted to, after I saw the news and I was like, I got to get a hold of Trent, because this is the right time. This is the right time to highlight the company. I mean, this is,
thank you.
And everyone needs to understand that I am not telling anybody to buy the stock. I am not a financial advisor. That's not what I do. All I do is look for compelling stories, do my research, try to make sure that it's the real deal and it's undiscovered, right? I love finding undiscovered companies, right, before everybody else is looking at them. And so what do you look for? You look for the size of the TAM, right? So what is the size of the TAM, Trent?
The size of the TAM.
The total addressable market.
Oh, I'm sorry. Oh boy. Yeah, I mean, how many millions of vehicles? We're going to be selling 12 million vehicles this year. That's 100% growth year over year worldwide. So yeah, what is the size of the market? How many millions of vehicles are we going to sell? And then what's the raw material composition? I mean, we everybody knows that our plant in Ontario is not big enough. So, let's take one of the big three, for instance. And if we were to say, look, we'd like to sell you 100% of our production starting in 2023 for your North American vehicles, or we can't, right? We just don't have enough capacity. But by 2026, they need all of that and then some. And so that market, it's the velocity here, change, and the rate of investment that's really going to propel us to keep going here.
And what we know is that, if anything, the drive to make this happen is only getting more intense. It seems like to me, right? They keep upping I mean, it's great to have these desires to have these things happen, but you have to have some realism in there too, right? I mean, you've got to. This is a long process, but you're way ahead of the game in terms of in my view, in terms of most others that are out there. Like you said, there is a lot of talk.
Yeah.
You don't see a whole lot of assets that are developed and are moving along, right? I mean, you just don't see a whole lot of that. I hear a lot of talk, but that's what kind of makes this very unique to me about this story. And then uplisting to the NASDAQ means what? That you are now, I guarantee you, there's a lot more eyeballs on this story than there were before. And that's confirmed by the fact that you're starting to see some real volume pick up within the trading of the stock, right? And I think as the story gets more and more told, you're going to see more and more volume, because this is something that we need. I mean, this is a national security, green energy, ESG, which is a hot button and is going to get hotter. ESG is a big deal, and it's getting bigger, right? I mean, SEC just announced that, it was a few weeks ago, that they want to really start monitoring the company's carbon footprint, right? I mean, more. You've got a hydroelectric operation, right, which is positive. I mean, there's a lot of positives here if you take a look at the entire picture. And I guess what I'm suggesting to everyone is, look, these guys just did the reverse. They are uplisted to the NASDAQ. That whole thing is now behind them. They don't have to be, stressing about being in OTC hell, right? And can actually focus on running the business and positioned well. I mean, the location, there's just a whole bunch of positives. So my recommendation is that you put this on your radar. If you don't want to buy it, that's fine. Just put it on your watch list. Go to their, above my head here, I've got their email address, or their link to where you can sign up to get a newsletter or updates from the company sent direct to your email, press releases, right? Just keep an eye on the development of this story. Trent, you seem to have a pretty good plan. I think you've thought this out fairly well.
Yeah, I put my money where my mouth is, right? I'm an owner. I sleep, eat, and breathe this. It's been it was some long, hard yards, and I feel like the winds that are back now. And I've got blessed with a fabulous team, a great board, a great market. It's just what keeps me up at night now is just like, let's keep doing what we're doing, right? Don't drop the ball on execution. So
all right, that. So and I love hearing that, right? So that's the other thing. And that's why you start following them. That's why you start following them now, because really what it comes down to is, and this is the volume spike that Trent was speaking about earlier on Friday, right? That's a big volume spike. And if you look at back over here, I mean, there was like no volume, right? Now we're actually seeing some bars.
Yeah.
Right.
Yeah.
And I think that's going to continue. People may get confused by the gap and not understand that there's a reverse split. And, in my mind, that's actually a positive thing. But this is this is when you start watching it. And I believe, I mean, look, these are volatile markets, and what you have to, in order to have conviction in a company that you're investing in, you have to understand the story, is what I believe, right? You have to understand the need, the demand, the size of the market, all of that, potential competitors. There's a whole lot of things to take into consideration. You feel as though, Trent, you're good on cash now. You don't need to raise capital. We just kind of talked about that. You've got people asking if you, and you're like, we're good, right?
Yeah.
You've got potential partners that could come forward like any day. This could be a potential, takeout candidate, right? I mean, you could be a target.
Hopefully not yet, but yeah.
Right. I mean, I want to be
I would say
real
that
clear.
keeps me up a little bit at night because I
want
want
to be really, really clear.
Get to production, but
don't sell now.
Yeah, you got it. Yeah.
Unless it's like a multiple of, I don't know, some crazy ass multiple, then you got to do it, right? But
agreed.
I mean, this story is just getting, you just hit the first validation mark, right? You got uplisted to the NASDAQ. Now it's a matter of executing and proving that you deserve to be on the NASDAQ, right? And then once that happens, you've proven that, then it gets really, really interesting, right? So that's how the asking price gets better and better, right? So very interesting story. The issue, and I'm going to point this out to you from the technical standpoint, and it's not, look, I'm not being negative. I'm just saying how it is, right? The market is volatile. I think we're going to see more volatility. There are still a lot of mega cap names out there that are, in my view, or in my opinion, are still very overvalued, and probably need to come down a bit more. And the issue with that is they have a big weighting within the overall indexes. And when the indexes pull, 90% of stocks will follow what the indexes are doing, right? So it's not a company specific issue, it's a market climate issue. So the difficulty with where your chart is that because of the reverse, and you're building right now, there's not a whole lot for the technical guys that just trade off of technicals. There's nothing for them really to go off of in terms of support, right? And so if it goes down and breaks below, I will tell you this, watch round numbers, right? 350, 3, those are like, for some reason, psychologically big for retail investors. There's round numbers, right? If you lose a 4, now you're in the 3 handle. So it's just a psychological thing. But I would suggest that, right now, the area that you would want to see hold as a technical guy would be $4, right? That you want to see for hold. If it doesn't hold, it's like, okay, well, where is the floor? And until that gets established, it could be choppy, volatile trading, right? Only because of the overall market. So, if you're going to look to get into the stock, if it were me, I would be dipping my toe, right? You dip your toe, you know what you want to have is a full position. You start with a little, whatever, a comfortable position that if it goes down in your head, I'm going to add to get to my full position. That is how I would approach it. I wouldn't go all in at, first glance, but put the stock on your radar, watch and see if Trent executes. I would suggest that he's done a pretty damn good job so far. So I would think that will continue, right? Trent, you don't plan on changing up the game, do you?
No, sir. No. Like I say, it's just I feel we got a lot of balls in the air, and everything seems to be landing right, and that's my stress, right? Keep the team, keep the strategy on course, get that OEM contract, ramp up production. It's going to be a busy time, but we're in good shape, and then the growth strategy, right? Recycling will be the next one, but stay tuned. There could be other things out there that are not in our current footprint.
Right. This is fantastic. All right, listen, Trent, I don't want to take up a whole lot more of your time, but what I would like to do is I would like to maybe the next time you have anything significant that you think is worthy of doing a follow-up, you come back and we just kind of hit it real quick and share that with everybody.
Yeah, I'd welcome that. Thank you.
All right, Trent, hold on one second. I'm gonna stop recording on this, but I want to talk to you for a second. Let me see here. Hey there, all you stock market junkies. Thanks for tuning in for yet another CEO interview here at Alpha Wolf Trading. Today we had Electra Battery Materials, ticker symbol ELBM, recently listed on the NASDAQ. We had the CEO, Trent Mell. I hope you enjoyed today's interview, and if you did, do us a favor. How about giving us a like? Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.